Hello, hello, hello. Everyone, good to see you. Sorry, the countdowns were a little off. My bad. I'm live. I'm live. Today we're talking about Shift4, okay? This is not a company I often talk about. In fact, it's not one that I do a lot of due diligence on. It's something that I'm going to need to start doing, however, because this company is looking absolutely fantastic. The funniest thing, they actually saw a massive sell off, not today, but the day prior, because they were the how do I say this? The culprits of causing a massive cyber attack against Caesar and MGM resorts. Okay. Truth is, wasn't them. They're not even their clients. In fact, even Shift4's own management is saying this is complete and utter market manipulation in order to lower the price of Shift4 stock. How do they know this? Well, the next day, the stock is up 11% on rumors that a private firm is trying to buy out their entire company. Do they have any merits to what their thoughts are? I mean, who knows? It's quite interesting. So, what does Shift4 even do? Why don't we start off with that, and then we're going to listen to some management comments on. They were talking about Braintree. They talked about Adyen. They talked about Toast stock. Their biggest competitor is Toast, just so everyone knows. They deal in the point of service or point of sale terminals. Okay. They sort of specialize in a lot of the stadiums, hotels, getting into the restaurant industry, and also going global, right? Uh, Very, very interesting company, extremely fast growing, so fast. Just to point out, they were doing about $4 billion 3 years ago. They were doing about $4 billion of total payment volume flowing through their actual payment terminals. Okay, 4 billion, not a small company. The last quarter, they announced that they did 27 billion. In the matter of 3 years, they went from 4 billion to $27 billion. Okay. This is absolutely a fast grower. I want to talk about this stock as we go through, but I also want to listen to some management comments. Let me bring this up. So I don't want to listen to this entire call. However, funny enough, I do want to listen to quite a bit of it. Okay. This was one of the conferences that they just did today, seemingly at the time that they were aware that not only, that MGM and Caesar Resort stuff was bogus, but then next, that they also heard about the firm being potentially bought out. So they know of this information, which is today's news at the time that they actually recorded this conference. So this is as present as you could possibly have it. It was recorded at 11 a.m. this morning, okay, Eastern Standard Time. In this time, they brought on every single person from management onto this call to talk about what the heck is going on. Now, what I really like, and I did not know about this management team, they are very outspoken. They will like legitimately name competitors and bash them. So listening to this was like, at the end of the day, it's stocks, right? You're not going to hear them like really call someone out. So it's about as juicy and drama filled as you can possibly get it. DJ, how's it going, my friend? Good to see you. Am I considered a finance or fintech junkie? Not a finance junkie. I'm definitely not a finance junkie. Fintech junkie. I like that. Tony, thank you so much, my friend. You should put a message on that and maybe I'll read it out. Instead, it's just a free buck. Thank you so much. All right, let's get listening to this because it's quite interesting. Make sure fun tech stick.
I'm fortunate to be joined by the entire Shift4 management team,
You guys see
including
that?
CEO Jared Isaacman, President and Chief Strategy Officer Taylor Lauber, and CFO Nancy Disman. Thanks for joining me.
Thank you.
Yeah. So I'm going to start with probably the most obvious question because I've been getting a lot of questions about this morning. What are your thoughts on taking the company private?
Sure. Geez, I think that I would think the first question had some news not broke on that would have been about the supposed cyber attacks we inflicted on
Thank you,
MGM
TJ.
and the Caesars yesterday. I mean, here's the
Okay, wait. This is the important part. Sorry, I wish I would have skipped past that little intro. I forgot that it was even coming up, but this is where it really gets juicy. So supposedly they were responsible for a cyber attack. Listen to what this man has to say about the stock dropping 7% yesterday to subsequently come up 11% today.
the answer with it. And forgive me because that like some of that trauma from yesterday is still weighing on me a little bit. Since we were here a year ago, and forgive my approximations, we've drawn volume over 60%. I think we grew EBITDA over 60%. I think free cash flows in excess of 120% year over year. And our multiple has contracted 5 turns. And it's not like last year things were booming from a valuation perspective. So we have been like we're at like I think 9 times on a like a next 12 months basis from an EBITDA perspective. So the fact that there were inquiries probably coming in throughout the year is valid. If I take in consideration the trauma of yesterday, which forgive my channeling my inner Pulp Fiction, but what happened yesterday was a travesty, and somebody's got to acknowledge it. I would say like the interest is so much more sincere to have one partner versus thousands, because I don't know how to describe yesterday other than like outright market manipulation. We spent the whole day fielding questions that we somehow were responsible for the cyber attacks on MGM and Caesars when had absolutely nothing to do with it. Our market cap peak drop yesterday of like 7.5% was greater than the combined market cap drop in absolute dollars between Caesars and MGM. And they're the actual ones that had a cyber attack, let alone the fact that we had nothing to do with it whatsoever. And
Just think about the idea of that. They had more of a market cap drop than Caesar and MGM, the two culprits of the actual problem. And let alone, like he said, he had nothing to, well, not he, but they had nothing to do with it. He goes on to explain how dumb this accusation even was.
had like no impact on our business. So yeah, I would say like there's some sincere interest in alternatives.
Understood. And so just to be clear, no financial impact from.
It's beyond that. They're not even a customer.
We said we only had
They're not even a customer. They're not even a customer. And yet this is what actually brought Shift4 stock down. And so now they're actually talking about it might even be good if we actually did go private. Like unbelievable.
we had half the Las Vegas Strip, which was not MGM. BetMGM is a customer of ours, which like we get the scraps that Braintree leaves behind because they price it at 0. So like BetMGM is a customer of ours. That wasn't even impacted as far as we know about whatever's happened with BetMGM. Caesars probably represents like 25 basis points of our EBITDA on an annual basis. My understanding is they may have had an outage for a day or two that had actually nothing to do with payments. So as far as I know, that was business as usual.
Fair points. All right, moving on from the news of yesterday and this morning. We're now halfway through September. What have you seen in terms of growth in your core business so far in the third quarter? And can you comment on progress you're making in new verticals?
Yeah, I mean, everything is going very, very well. I guess like, for to break it down by vertical, we have a ton of momentum with our SkyTab product right now. So I think you should expect at Q3, we'll probably give you the one.
SkyTab is their actual payment processor, the ones that they put into restaurant and bars.
1 year comparison from when we came out of beta till now. And you probably shouldn't be shocked. There's some good momentum around that product. Hotels continue to come on. I think we've won every new resort that's been built in this country over the last year. So that wasn't even a gateway conversion. That's net new, including the 2 new signature properties in Vegas, which go online in the 4th quarter. Stadiums have been awesome. Probably for the past year now, every stadium we put in the agreement that, you have to give us ticketing. We just needed to get the final 3 integrations done, or for the final integration of Ticketmaster done, which was a huge one. So that's been inked, and I think that's pretty close, if not finished, with Ticketmaster. So that's awesome. Yeah, we're like incredibly happy. And then obviously Finaro, which is great because we finally will be able to sell our products in Europe soon. So
That's their international acquisition that they had. They do a lot of acquisitions, Shift4, which is very different than a lot of other players. Like, for example, Adyen does no acquisitions. They build everything organically, and the stock has been greatly rewarded for that. So
Yeah, I'd say we're like pretty happy with how things are going.
Great. So you just alluded to some of the pricing pressure that we're seeing from Braintree, and with the news of audience growth slowing in North America several weeks ago. What do you like? What is your pricing strategy going forward? How should we think about your spreads?
Yeah, I think this is. I mean, this is. I think this is important for investors to understand right now. Is like if you're growing volume, you are adding value more than approval or decline. You are contributing to some better commerce experience, and that's why people are selecting you. Like again, I've used the example before, like Shopify can't come and contribute a better mobile payment experience inside the Baltimore Ravens any more than we can give like a seamless e-commerce experience for their customers. Like there are some very, very clear moats. And you are getting kind of properly rewarded based on the size of the customer. That said, like the bigger the volume customer, the pricing can come down quite a bit. It's just like it is, as Taylor, it's like some laws of physics there. Like, if you sell 1% interest in the Baltimore Ravens, it costs an awful lot. They're not giving up 50 basis points very easily. But what they do care about is making it an awesome experience for their fans to be able to order a beer and a burger in their seat. So we're a 24-year-old company, 17 plus of those years, focusing on the restaurant on Main Street. That's like an 80 to 90 basis point customer. Those take rates have been unchanged throughout like all of my, memory over the last more than a decade.
So yeah, what he's going to also say is that, and this has been across the board, what I've been looking at is that whenever it comes to small, mid-sized businesses, is that the take rates really haven't changed too much. It's the extremely large enterprises that are getting a ton of pricing power right now. That's really what's weighing down on a lot of these payment providers on their actual multiples for the stocks. What he did say though earlier in this call is just new volume is better than no volume, right? Like even getting those large clients and still going after them is still a massive feat and something that they need to go after.
Even as you add more value with services like software and such. But, a customer like potentially the Dallas Cowboys, they're going to come in at a meaningfully lower take rate than that. Now, what happened with Adyen, like I think there's some very unique circumstances there. Adyen is hands down the best global e-commerce payments company in the world. They add value in Europe and emerging markets like nobody else does. They are the easy button for every awesome customer like an Amazon, Facebook, or whatnot in the world. But the US is going to be the lowest take rates for sure. And when those merchants woke up earlier this year, and started doing layoffs and people cared about more than just the top line, it made sense that they went back and revisited the easy button in the US market where there's no FX, no fraud screen, no 3D secure. It's like, this isn't a market that can be priced very low. That happened, but that doesn't change the rest of the world. And frankly, people were paying attention. We said this in Q3 last year when we surprised a lot of people with a lot of volume and said, hey, look, we matched Adyen rates for this one customer, and you should know that's like low teens, kind of take rates, but it's better everywhere else in the world,
this is literally a gold mine conference that actually happened for people that are really interested in fintech. Like he said, Adyen is by far the best player globally. Okay, whenever you're Europe is their mainland. Okay, Braintree is doing extremely good in US right now, and that's amazing. What's really exciting and what I've been hearing about lately is Braintree actually starting to go over to more of the European side to disrupt Adyen over on that side. Now, there's a bunch of tools that Adyen has, like they said with FX, right? Like that's much more important than just in the US. If you're in the US, it's all US dollars. You don't really need those extra tools that Adyen has that Braintree might not have right now. They don't even have FX as a service. Okay. Adyen absolutely does. So there's a ton of pricing power over in Europe and all these things where there's a ton of different currencies. In US, it's just seemingly who can price down to the bottom. And what I think is amazing for Shift4, okay, what I really think is cool is that they're mainly in the States right now. That's where they have grown up, but they do have the ability and they have started to go internationally. So whenever, and this is including with Braintree as well, but whenever you're starting in the States and you're growing your base in the States, to go, globally from there is where we can actually find extra margin. Okay. If you're Adyen and you've grown in Europe and dominated in Japan and breaking into India and having, to find new growth, you have to get into the States. Remember, that's the biggest player in the world, right? If you have to break into the States, where pricing pressure is definitely the key reason why people are selecting a payment provider, it's going to be much harder, to actually keep up those high margins. If you're used to the low margins, it only gets better from there. And that's how you pick stocks, right? You pick stocks not based on just who has the highest rates. It's it depends. I mean, this is not a one size fits all kind of conversation, but you also have to look at other things like, where does that pricing margin go from here? Okay. And we will absolutely look at Shift4's, gross margins and all these things to look at this company, because one thing that they haven't done that Adyen has done, that PayPal has done, that all of these other payment providers have done, have lowered their margins and taken larger and larger hits. In fact, Shift4 has continuously increased their margins. They're having better success on their network fees than they did in previous years. That's just not being seen right now. Whether that, that's going to continue into the future, we don't know, right? We'll never know that. But this is a definitely great company to be looking at.
Is why we're following that customer into new markets. When we get there, we're not trying to do it to win the next Uber. We're just going to sign up a lot of restaurants and hotels when we get there.
Yeah. I think it's safe to say that you are frustrated with how investors are viewing your business and your stock right now. What do you think investors are missing about your story? And I'd also love to hear from Taylor, since he's been with you for a long time.
One of you.
I think there's a handful of pieces. We are a complex business because we serve a lot of verticals. And the idea that each vertical has its own different dynamics that help us win can sometimes be consolidated down to a simplistic story. We've had, exponential volume growth because we keep adding bigger and bigger customers in bigger and bigger verticals. 17 years of our history, we boarded, the bar and grill on the corner, and suddenly we're boarding, as Jared mentioned, the Baltimore Ravens, the Washington Commanders. These customers are fundamentally different. The reasons we're winning them are fundamentally different. And so I think that can get lost and kind of commingled into a story that, it's grow at all costs, which has been, to investors' credit, has been a dangerous story in the fintech landscape. I think where we get sort of a little bit frustrated is I think we've delivered kind of best in class growth, but also an incredibly disciplined profit machine and free cash flow generation, expansion, et cetera. And, in the investment community, there's not always a perfect home for both high growth and cash flow generation. People seem to want one or the other, and oddly, delivering both, which is something that is just intuitive to us as a founder-led business, sometimes takes a little bit of time to find a home for.
Look, I mean, if I'm like chill out, just zoom out, which I try and do, and have like an objective view, I think that for the last 3 years has been an incredibly turbulent time to be a fintech investor, for a period of can do no wrong, throw the dart at the board. And I'm sure it's a great company, to now where it's super hard to figure it out. Right. I think people woke up a lot of days and found out that, some of the investments behind it, these companies were ludicrous and completely mismanaged investor capital on how they did things. So I understand some degree of skepticism as you go through it. I'd like to think we actually have delivered really well, and tried to point out along the way, when things came up, great payments companies don't do M&A. I was like, okay, there's only one scale payments company that's never done M&A, and they just lost 60% of their value in a matter of.
If you guys don't follow the industry enough to know exactly the shot that they just took, it's directly at Adyen's. Okay. Adyen does not do M&A. They build everything organically. And he literally just said, obviously, this is not this is not the showcase that we want to be going after of no M&A. Real technology companies don't do M&A because they just are like literally getting crushed like everyone else. In fact, the only company not down 60% is companies like Shift4. All the other payment providers, the PayPals, the Adyens, all of these guys are getting crushed. Obviously, they're doing something right.
Of a week. It's like actually when there's a convergence between software and payments going on all over the world, there's exciting opportunities to be a good capital allocator and unlock value in it, right? Or it's like, oh well, you have your tech is old. It's like, well, the sexy tech company just had a 24-hour outage. So I don't know if that's necessarily like the right way to be evaluating like the good and bad. So generally speaking, I think like we've tried to deliver really well over time. Like we have a playbook that's worked for a very long time. We recognize the convergence that's happening with integrated payments and where there's awesome opportunities for the continued convergence of software and payments all over the world. You're just trying to do it without having your entire day ruined over things that had nothing to do with us.
Got it. Okay, that's really helpful. And just bring Nancy into the conversation. One thing I hear about Shift4 is investors want more transparency in the financial accounting. Some people question customer acquisition costs and amortization. Maybe if you can just like help clear that up, because I get the question a lot on your accounting, and you're obviously fairly new and you've signed off on those accounting practices. So could you just explain why Shift4 does some of those that are different from your competitors, and any transparency you can add?
Okay, I don't want to go too deep into just this call and the accounting and stuff like this, bore you guys out. Potentially we can go back to that on another day, but I just thought that beginning part was so not educational, but just, well thought out, very, very smart conversation of just like, obviously we're doing stuff different, but we're getting priced as if we're going to die just because everyone else has. And they might, like, who knows? I mean, but that's the bets that some people are willing to take. Currently, I do not have a position in Shift4. Maybe I should have got one whenever it dipped 7% yesterday, but it's hard whenever you don't follow a company day by day. If which individual companies do they actually work for? Whether it and the problem is they actually do cover Caesars and stuff like this as a client, but it's different. They can have some buildings that are actually theirs and some that aren't, and it's all kind of weird. But yeah. Hi Tanner, I thought you were going to elaborate on PayPal after the interview earlier today. Yeah, I have some notes for PayPal as well. Just wanted to cover for as well, just because this news kind of dropped and it was really, really exciting. But there was some interesting stuff about PayPal as well that I do have in my notes. Why don't we just take a quick look at some things that Shift4 is kind of, I guess, known for a little bit. So first off, actually, I don't know why my notes. Yeah, my notes are a little sloppy, or not my notes, but my spreadsheets. I don't care about all these names. Let's make the charts big. Okay. That being said, so here are a couple statistics that they like to tout. Okay. Total gross revenues, total expenses to get those revenues, which leads to total gross profits. Actually, this gross profit doesn't seem right at all. I think it's adding them. Okay, let me actually look at that real quick. Yeah, it was adding them. Okay, bear with me. Bear with me. There we go. All right. Just a little Excel magic. There we go. Okay. So, this is messed up too now. One more second. One more second. You change something in your spreadsheets and everything goes down the drain. There we go. Okay, we are back up. last change, I promise. Okay, these are all the numbers that I'm going off, by the way, just so you can see sort of how the sausage gets made. I just need to flip around a number. So whenever you actually look at their gross profit and gross margins, what you can see is something quite spectacular. Well, payment providers are seeing worse margins as time goes on. This is not what Shift4 saw. At the very bottom, we saw 15% gross margins, now actually holding up at the highest 25%. Maybe I can snag that last one, or we can just go over here and look. 24.91%, not seeing nearly the compression that a lot of the other, other payment providers are actually seeing. They are actually, cash flow positive or free cash flow. There we go. Just for the last little bit, which is quite exciting. So, they might be able to, repurchase shares or do any of these things. And obviously, as you can see, their payment-based revenue has just been going up and up and up. This end-to-end payment volume, this is their total volume that people can see or that they're actually receiving. And by getting these larger and larger clients in these stadiums that they're getting, I'm actually surprised that Anthony Noto closed out a deal, or SoFi Stadium closed out a deal with Block instead of Shift4, considering the expertise that they have in that actual field. Block, they really don't do that at all. That was by far their biggest client, especially in that space, where this is what Shift4 kind of does every single day. So I thought that's quite interesting, and maybe we might see a change later on. But like massive spikes, even in this most recent quarter, in the amount of revenue. Like what we saw in Q2 of 2020 is how much they grew from quarter over quarter. So really, really interesting. Another payment provider that we're going to take a look at. Obviously, I have much more deep diving to do on this company. There's a ton of notes that need to be added. But this is just a first look into Shift4 that I wanted to look at. And who knows? It might be even a good time to buy now. I'm not buying right now, but it could be if they actually are going private. What actually did happen on that call that you guys didn't hear was them talking about how they do want to go private. They're just kind of sick of the market manipulation. They just want to get to work. They want to grow a faster and faster company. And so being bought out completely, might be a way for them to do that, or maybe potentially try to buy enough shares where they can own more of the company. What I actually think is quite interesting from a Shift4 perspective, just looking at the actual stock, I was doing some deep diving into the actual company. Held by insiders, in terms of total shares held by the company, 1.4% is owned by insiders. 99.56% is held by institutions. 99. Now, to be fair, 14.7% of that, 14.7% of the overall company, some people even say it's as high as 16%, is shorted on this company. Okay. So there are some speculators. That's where they think the market manipulation is also coming from. There is lots of shorters of this company that obviously want to make their money. But if you compare it head to head with Toast, it is a very, very interesting valuation. Like, maybe I can bring this up. If you guys don't know, Toast is by far their biggest competitor. Okay. One that is also growing quite aggressively, one that they even tout in their own earnings call. So this is their most recent earnings results, right? Just growing ridiculous numbers. Look at this, year after year after year, end-to-end payment volumes. They're growing up market. They're doing all the things that you want to do as a payment provider. But look at this. This is SkyTab. This is their bar and restaurant point of sale. And where they say primary competitor, they literally, it should just be written out. If anyone wants any more understanding, it's Toast Inc. Okay, this is Toast that they're talking about. And they're talking about the pricing for how they actually do this. What's very interesting about this company, they actually offer their point of sale terminals for free. Like the very, very expensive ones, the one that, Square doesn't offer them for free. Toast does not offer them for free. SkyTab offers them for free. It's a big differentiation in their pricing model. But then whenever actually looking at the monthly software fees, you can see even this is not any different either. They even do a much, much cheaper model. So over the 5-year term between Toast and Shift4, it's much, much cheaper to use Shift4. So if they can still stay very profitable on their own end, right? That they are actually bringing in free cash flow and they are profitable. So it's very, very exciting opportunity for them to still offer cheaper rates. That's where they're going to grow, hopefully up market and hopefully get into, bigger and bigger merchants. But one thing that you should absolutely think about, if Toast is still growing, which they are very aggressively, and they are taking in this much more money, obviously there is a real opportunity for them as well, right? I'm actually not like picking one over the other. I just think like fintech's where I want to be. There's just a ton of growth here. But yeah. So, okay, let me get off this just because I wanted to show you guys this. Bear with me. Come with me. Boom. Okay. This is Shift4. Okay. And then we also have Toast. Cool. So looking at the actual market caps, Toast is a $10 billion company. Shift4 is a $3 billion company. Sorry, 11 to $3 billion company. What we actually see here too on Shift4 is that their price to sales is a 1.67. Price to sales on Toast is a 3.23. So even just getting to the price that Toast would be at in terms of a valuation would bring Shift's market cap to like 6 point something billion dollars, a practical doubling from here, even more maybe. Right now, not everything is absolutely cheaper and much, much better on Shift4 side to Toast. They don't have nearly the cash supply that Toast has. They have much more debt. They have these sorts of things, but it's still an absolutely much cheaper valuation than the likes of Toast in terms of a multiple. 10 times price to book, 8.7 times price to book. Forward P, nothing at Toast. Forward P at Shift4, 13, almost 14 times. Is really like not terrible. You know what I mean? It's an opportunity. Once again, these are not my most popular videos. Okay. I knew whenever going to post this video today that this is not going to be my most viewed video, but it's an opportunity that not a lot of retail investors get to see. If you're only looking at the Palantirs, the SoFis, and the Teslas of the world, it doesn't necessarily mean that you're always going to catch these hidden gems, right? We want to find the new banks of the world. We want to find these sorts of companies that might not be found all the time. Doesn't mean they're going to outperform those companies, but it is good to have some options, see what, the broader spaces are about. If you just think that your one company is the only company in that entire industry that's going to succeed, you're wrong. You are wrong. It's very, very exciting. I want to hear more from management. So that's what I think I'm probably going to do this weekend, is just do a huge deep dive into Shift4, listening to those guys, because I love that style of management of just being like, look at all the problems that Braintree having. Look at all the problems that Adyen's having. Look at all the problems that Toast is having. Literally calling them out by name and being like, we don't have these problems. Get a real sense for where they are benefiting and get a better insight into a company or an industry that isn't fully a black box, but payments is definitely more complicated than something like, e-commerce side, like the Shopify and Amazon stuff. So I find much more open and easier to understand than payments. Okay, what else? Why don't we dive into some other news? Oh, I actually did bring this up. So remember whenever I was talking just about the margins of Shift4, whenever you're actually comparing that to the likes of an Adyen, this is the problem for what you're seeing at Adyen, right? If you look at the EBITDA margin from this first half of 2023, it's 43%. Last year it was 59%. Same time frame last year. So the pricing pressures have really come in for Adyen. Now, it's not completely true. They're doing a massive hiring spree right now. These things can put short-term pressures on these margins, right? But still, you're not seeing that at all at Shift4. You're seeing much better margins than you did last year, right? Which is just not being seen from PayPal, not being seen from Adyen, really showing out a standout company versus the likes of other peers, right? But why don't we dive over into just quickly? Actually, it's 9:06. I'm already past my 30 minutes. We'll do a PayPal episode tomorrow. Okay. I'll even try to get a guest on, but there was actually a PayPal fireside today. One thing that I did find of very good interest from that call, we're going to be hearing from Alex Chris in this upcoming quarter. So Q3 is finishing up, right? So September's the last month. We got about 2 more weeks of that. And then that is PayPal's quarter closed out. So far, website traffic is showing great things at PayPal, Venmo specifically. All the companies that we're covering, where it's not being seen very good in the fintech space, it's Cash App. Cash App not looking so good. And we can talk about all sorts of Charge Hound, Hyperwallet, all these things. I'm actually building a presentation just in case we need a Stock Tank episode. I'm building a PayPal one. Anyway, hope you guys enjoyed this, Shift4, a little bit of a different deep dive. I'm glad that some people like a little bit of a different view into different companies. But if you're just tuning in now, make sure you go back to the beginning of the video and listen to all those juicy details about this really fast growing company. Thank you all for watching, but bye for now.